It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, you know where to go to talk some equities along with us. Go to cmegroup.com/TWIFO, TWIFO, /TWIO, should also get you there. And then you'll get this fun TWIFO report, listeners. You can follow along with the show. In the asset class list, you're going to go down 4 slots to equity indexes. Then you're going to drop in the product family to the U.S. Index E-mini. And then from there, we have an embarrassment of riches on the product side. I have some things I know I want to talk about here, but I know, Mr. Rich, you've been looking at the equity space as well, including recently today talking about some distributions and rotations that are catching your eye out there. So what did you write about today? What is catching your eye in the world of equities right now, sir?
Yeah, I think, when we look at starting the year, the equity markets are all up. It varies a little bit, but the S&P, which is what most people look at, up about 1.6%. Good start to the year. People start talking about the January effect. They're really focused on the headline index, right? The allocation into stocks, things like that. But I think beneath the surface, there's a lot more going on that's even more interesting. I think what we're seeing really is a rotation out of tech. AI has been the theme for the last 2 years. I'm going to imagine most people looking at their portfolios, it's long beta, they're massively overweight tech just because it's done so well or had done so well. And so there's a lot of vested interest, and global investors as well have been in the US, have been in tech. But what we've seen this year, and actually really started end of October, is that tech is down. Tech is down for the year. Tech is pretty flat since the end of October, while the other markets have been a little bit better. And within the sectors within the S&P 500, if you look at it over that period, it's continued. This year is just a continuation of last year. What we see is that the materials and the energy and the industrials indices, those three, but particularly materials, not surprisingly because of what we're seeing in commodities, but energy sector as well. And oil, remember, oil's just starting to go up now in the last week or so. It actually had a tough Q4, but the equities have been going up even in the face of that. You're starting to see a rotation out of tech and into these kind of more cyclical sectors. And I think that's notable, right? So you might say to yourself, well, there's just seeing some rotation, some distribution. The headline index isn't doing that much. And so people are selling out of their overweight in tech and moving into the sectors that have lagged, the low PE sectors like energy and materials, things like that. They had moved it a little bit into financials, but that's given it up here this week. But interesting to see that. And then you say to yourself, well, is that really all it is rotation within the index? And I think if you look a little further, you realize maybe there's something more afoot there, because the small cap stocks this year are on fire, right? They're up over 7% this year, while the headline index is up 1.6 and the NASDAQ is flat to down. So that, I mean, clearly you're starting to see people moving into these kind of pro-growth sectors, and then the pro-growth index being the small cap. And so noting that, and there's a big kind of negativity around growth, or the thought that all the growth was going to come from AI. And I think what you're seeing within the rotation is things are, there's a perception that maybe things are going to get a little bit better in the economy, and people are looking to buy some of these laggers. And maybe that's what we're seeing about a lot of the commodity space too. And then kind of even going further, if you look overseas, the overseas markets, which crushed the United States last year, are off to a better start this year than even the U.S. I mean, you look at the Nikkei's rocking and rolling this year on weaker yen, things like that. You talked about the G5 vol index. I mean, the yen getting up there, dollar yen spot getting up there near 160, where the BOJ's intervened before. That the yen weakness usually leads to equity strength, and so you're seeing the Nikkei index up quite a bit. So money seems to be rotating out of U.S. tech and into other sectors within the U.S. and other indices within the U.S., but also overseas. And I wonder if there's an element to where global investors who lagged badly last year, if they were invested in the U.S., even U.S. tech, are starting to say it's time to maybe think about some other ideas out there.
That Definitely appears to be the case. There definitely seems to be some action rotating out of those Mag 7, Mag 10, call them what you will, which have been the story of pretty much every year since 2020. It's all been about tech and AI and everything else here domestically on the equity scene. Again, this year so far, looking a little bit different. You can look at it a lot of different ways. Rich was just talking about the different sector performances, and obviously tech not having a great start to the year. We just broke down some of the individual name performances. Names like Apple, Meta, all down 4 to 5% already year to date. Small caps, also a destination for a lot of you these days. As you're rotating out of large caps, you're getting into some of the small caps. Small caps certainly feeling it. S&P's up about somewhere in the ballpark of 1.6% year to date. Well, small caps blowing that away so far. RUT up about 7.25% a year to date. So an absolutely wild start to the year for small caps. Our chat talking about small caps as well, saying maybe RUT or IWM are going to be the trades of the year. Well, they're certainly starting out hot. I mean, take silver out of the equation because silver is spoiling the game for everybody. Silver just looks and is ridiculous. But outside of that, 7.25% in a couple of weeks for small caps, that's pretty much a year's worth of return already. So bear that in mind. In fact, let's go out there right now. Let's kick things off, diving into a little bit of RUT action. And is there some action this week? The answer is yes. Nearly 50,000 contracts on the tape. You know, flash back a few years when we used to talk about RUT every week on the show. We'd be excited if there was 15,000 contracts on the tape. Already nearly 50,000, so a very different regime for volume and interest in small caps these days. And hey, who can blame you? 7.25%. That's going to draw some eyeballs. The other interesting thing about RUT, if you're not all in on 0 day, I mean, RUT has the 0 day action. A lot of 2700s going up right now. RUT hanging out when we kicked off the show, right around 2703. So you're getting that action, but you also get some other stuff, which is kind of fascinating as well. RUT and IWM seem to like two flavors. They like straight 0 day upside and then usually roughly 1 month or 2 month out puts to the downside. That seems to be what contends to be the dominant trade. And right now, looking at RUT options, the actual dominant trade, in fact, the dominant cycle is not the contract going out today or tomorrow. It's going out to the Feb cycle that expires in 36 days. Listen, that's where about 27% of the flow is going up this week. By the way, if you're wondering what is the vol in the Feb small caps, about a 1790 off about 0.2 of a point right now. So vol coming back in, we're seeing that kind of across the board in the equities today. Skew-wise, things were looking pretty wild last week. They have mitigated a little bit. Still fairly juicy, though. The puts last week in RUT were 10.4% bid. Again, that's some pretty lofty stuff. Coming in 2 points this week, still, though, 8.4% bid. That is nothing to sneeze at. The calls last week, 7% cheap. Now this week, 5.7% cheap. So the skew was ridiculous last week. It's still fairly extreme, but coming off those extreme ends just a little bit. And what is the hot option out there in RUT this week? Again, everyone's obsessed with 0 day upside. And again, there's about 1,000 of the 2,700s have already changed hands that go away today. So there is some of that action. But the hot option out here this week is actually the 2,400 puts. These have changed hands about 4,100 times this week. So a lot of action in the 2,400 puts. So a 300 handle out of the money put. Again, that's kind of how RUT tends to flow. They like a little bit of 1 month out, roughly out of the money put action. When you do a little bit of digging, though, you'll see it's actually the 2,400, 2,500 put spread that appears to be lighting up the tape out there today. It traded about 3,100 times yesterday, both opening, and about 1,000 to 1,100 times today. So some action on the 2,500, 2,400 put spread. I did some digging. I couldn't find straight prices for those today. I found a June 2,500, 2,400 put spread. If you're wondering, that put spread in June is trading for a little over $20 today. But Mr. Rich, does that float your boat? 1 month out, 2,500, 2,400 put spread. So a little bit of downside action. And would you be more of a buyer or a seller, you think, at that level?
I think I'd be a seller, to be honest with you. I'm been on record as being kind of bullish on the small caps. I think you're seeing a lot of wind at the back of the small cap companies finally. They've been under siege for a few years. Certainly, the higher rate environment hurts small caps more than large caps. So the fact that the Fed's now brought rates down for 2 years, that's definitely going to be a tailwind. I think you're seeing some, the tariff picture might be getting a little bit more clear. I think that's kind of moving on. Labor markets have started to cool, and that's kind of helping out their margins. And I think any sort of deregulation, which the Treasury Secretary talks about, is also positive. So I think there's more tailwinds than headwinds. I can imagine there's some, the small caps. One of the things I wrote about last year is like they were massively levered money was really short the rut into last year. And they started to cover on that pullback, on that move lower in November. And through the end of the year, they covered their short a fair bit. But at the same time, it's still short. So I think that there's probably, and then the earnings expectation within small caps, because the earnings were so low last year, the growth rate is pretty high. So I can imagine some are looking at it and saying the bar is kind of high. They like to be short anyway, so they want to own some put spreads. But I think we talk about it's maybe outperformed by 5 or 6% this year so far, which does seem like a lot in the near term. But if you look at where it could go, just based on this move seems big the last week or two, but just looking at a 5-year basis, this thing could really massively outperform just to get back to the mean. It has double-digit % relative upside just to get back to the mean. And I think given those tailwinds, I would be more looking at longer-term calls, not zero-day calls, but longer-term calls as a way to kind of express it, because I don't think the volatility across the surface is that onerous right now. And like you said, skew kind of gets crazy. And so using skew as a way to even express that, selling put spreads to buy calls, things like that, can be pretty interesting.
Someone could be following your lead, Mr. Rich, because you also saw some action today and indeed this week in the SEP 2800. So roughly 100 handle out of the money calls going all the way out to September, which these days in the 0-day equity world, Rich, seems like an eternity. Are those going up for about $154? So maybe that's more along your lines, or is that too rich for your blood, sir?
No, I think I like that. I like the timing of that as well too. Kind of giving it a couple quarters for things to kind of start to really play out on the theme. I could certainly see that. And the thing you have to understand too is when you think about these different indices and people looking at them, the weighting of those different sectors within the industries is very, or weighting of the different industries or sectors within the indexes is very different. So the small caps have a much heavier weighting on industrials and things and financials and energy than you would have in the S&P, which is much more heavily weighted towards tech. So that rotation thing we talked about before is also playing into the move. You're just looking at how the Russell is composed. It's gonna be another tailwind potentially.
Wild stuff. Looks like if you're interested in that put spread, I found the March equivalent, listeners. So it's trading in March. I guess that 2,500, 2,400 put spread is kind of the theme of the week out here. It's trading in March, which is a little bit beyond the Feb I was talking about. Obviously, that's trading for close to $16 out there. So just to give you some frame of reference for what you're getting if you're selling these. By the way, our chat Nichols saying he can get behind selling that put spread as well. So maybe there is some interest in selling some downside puts. So you have to sell a lot of them if you want to pay for those SEP 2800s. But maybe that's one way you could go.